And here we are back at the basics. And I believe that half, or even more than half of you don't know this, that you have no idea what's actually going on behind the curtain. What you don't see at first glance, you don't study it. And you don't know that this is how it actually works. But it's really important to understand these principles, the basic principles of trading on the stock exchange. This is how the market behaves. Whether I'm a small trader or a big trader, and especially if I'm a big trader, the kind of trader we want to follow to go with the big players, then it's even harder for them. Okay. And now I'll try to explain the principle to you when I'm trading, when I want to trade. And let's say I can buy anywhere. I'm speculating that the price will rise, the price goes up, and that's where I close the trade. And the difference between the purchase price and the price at which I close the trade is my profit. And now the question is, what lot size am I using? What is the size of the position? And so on. There are a lot of variables involved, but the basic idea is that I buy at a certain value. And right now I have Audesty in front of me. So I buy at a certain price level, the price goes up and I make a profit. I keep earning. And at some point I have a profit target. That means the trade basically either I close it manually or the platform closes it for me because I have a take profit set. So it's actually pretty simple. The principle of how I make money, right? I have the same position here and it's simply more expensive. So I sell. It's harder to understand with selling, right? Meaning, how am I able to make money when the price is falling? Try to imagine the broker as a kind of rental service, yeah. Like a rental shop for any euros, dollars, any currency. It's like a rental service. It's your partner in the sense that it lends you those different currencies for trading because you don't actually buy them physically here. You partly borrow them, right? And you borrow one lot of the oldest currency pair with a size of one lot and you borrow it. But immediately at that moment when you borrow, you are selling. That's basically what it is you're borrowing. That's from the broker, but at that moment you're putting that amount into the market, you're selling it, and you have the cash, so to speak, in quotation mark. You're holding that cash. If I were to compare it or simplify it, I effectively made a full $100 from the substantial size of that particular position. I now have 100. The price goes down. I was speculating that it would go down, 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 and then I buy back the same size of that position once the price is down. But now it's cheaper. That means I have some money left over. As soon as I buy it, I immediately return it to the provider, to the broker. That means I don't owe the broker anything, but I have money, I have cash in hand. So that's a simple way to explain the principle of how I'm able to make a profit even on a sale, right? But when you look at it in more detail, especially with the bigger players, that's what I want to show you here. At one point, I clicked here that I wanted to buy Alduste, and I bought the total position was, because it's according to the money management of the account, I bought 4.33 lots in total. The panel calculated for me that I should buy this. That means it bought. At one point, it tried to place an order in the market for 4.33 lots. But it didn't find it. It found one lot that someone was offering for sale. I wanted to buy it for 0. And that's the ratio. That's the value 0.63072. And there I bought one lot. But that wasn't my entire position. I needed to keep buying. That means it went and bought at the value of 0.6073, another 0.55 lots. And again, that's still not my whole position, so I actually have to buy from me at a worse price. These are such far out decimal places that with the position of 4 lots, you really can't notice it in the price. But if someone is a big player, then they sure as hell notice. Yeah, but 4 lots are nothing. In this market, that's absolutely nothing. And again, it came down to who's selling the market and the marketplace. Yeah, the market. It's basically an auction, you could say. So he found that one lot was being sold and bought it from me again at a worse price. Or rather, this time it was actually a better price because the price had been oscillating in the meantime. Yeah, that's when at one moment I want them, but the price keeps going up and down. It keeps fluctuating somehow, right? But it's a different price. If I had a large quantity, it would always be worse and worse. Or most of the time, the price just gets worse and worse. And it doesn't matter whether I go long or short, I always get a worse price than I would like, worse than the one I started with. Yeah, and now I bought actually at a better price. 62,931. That was a better price. I bought, it found me one lot there, and the remaining 1.78 lots for my whole position, it found again at some price level where someone was selling, and I bought it from them. Yeah, and simply, if there's no one to buy from, then there's no one to buy from. Here, my broker found me the counterparty. Great. That means I bought, and here is a buy order. Even though it's split up gradually, I bought it. And together it gives me that position of 4.33 lots. And now what happens when I want to exit that position? That means here I exit the position and again I said stop. Yeah, either I did it, the market did it, or the platform said that's it. And now, in order to say stop, I have some oldest holdings and I need to have a counterparty again so I can sell it to someone. If you get what I mean, I'm still holding that currency pair. That means I found a counterparty who matched me at the value of 63,284. That counterparty matched me and I sold him one lot. He found us at just like this order. And he found it. He found us at the same, there was someone there who apparently wanted to buy. So again, at the same value of 63,284, I sold this other position that I bought here. Great. And then he had to find another position. But that's already at a different price. The next two that I had there, he sold at a slightly different price. Overall, we're talking about not even a fraction of a cent. It's just a decimal point, So in terms of price, with such a small position in quotes, such a small position, I didn't really notice it. But the big players definitely do. That means they have to find a counterparty. When they close the trade, they have to find that liquidity. So they have someone to sell to. So they have somewhere to close the trade. You get what I mean, right? And that's the important thing to understand. So again, here he found it. And during that time, I either had some profit or a loss. It doesn't matter even if it's always, whenever you close, even if it's at a loss, I have to find the counterparty. To whom, when I want to close a trade, who do I want to sell it to? If I can't find the counterparty, and that's the broker's job, either I have a good broker, and generally he has the liquidity, and that's why I trade with him, because I get a small spread. That's proof that the liquidity is there. And he finds me. He finds my counterparty as quickly as possible. That's the thing. That's what's important for Meadow. Have a partner who can immediately, or as quickly as possible, find me that counterparty. So, even though I personally sold USD here, it basically did not affect me financially in any truly significant way. That means I am completely okay with this, and I genuinely do not care, like I said, whether I am at a loss or in profit. At this moment, I was at a loss, in profit, but it doesn't matter. It doesn't matter. It really doesn't. It's always about that order, just like when I enter the market, I have to find a counterparty. And when I exit, I also have to find a counterparty to actually close the trade. And only at that moment, when I find that counterparty, is the real money there. Because I can say that I want to close that position, but if I can't find the counterparty, I don't have the other side of the trade. I have such a large position that even if they're currently nibbling away at it, partially liquidating it, they won't liquidate the whole thing, right? And as a result, I end up getting worse and worse prices. This happens to the big players, and that's why they're looking for liquidity. Yeah, we're still talking about liquidity. What is liquidity? Well, this is actually what liquidity is. Or more precisely, this is what the big players are looking for. They want someone to buy from and someone to sell to. So that's just to explain it. That's the principle of how the market actually works behind the scenes. For you, it's simple. You just click and you've bought, you click and your trade is done, right? But behind that, there are actually a ton of steps and a lot of things going on. And what's hidden there, especially for those, and it's good to understand this, because then you'll start to understand the big players. Why do they go where they go? Why do they go below that zone? Because that's where the liquidity is. That's where it's possible to bounce. That's where it's possible to buy from someone or sell to someone. They're looking for these kinds of places. Of course, they take care of a lot of things among themselves, but not everything. Sometimes they have to start somewhere. Sometimes they have to say from where to where, what interests them, what the goal of the trade is, where they'll pick up those orders and so on. They have to think about it a little differently. It's also important to know that they think about it differently. And if you want to do business with big players, you have to know what they're struggling with, right? You have to get to know your partner or opponent, whatever you want to call them. Take care.